Hi, this is Steffy and welcome to the Financial Fox. Today is another episode where we'll be discussing tokenization of assets and securities. That is really the future of capital markets. That's the way that I see it, and definitely I'm not the only one. Joining me on the show, I have Bob Ejodame, VIP Capital Markets at INX, a FINRA-regulated tokenization platform, and Mark Child, CEO of Condor Gold, a gold mining company listed on the London and Toronto Stock Exchange with a flagship assets in Nicaragua. Two very different perspectives. Bob is working with one of the leading tokenization platforms in the world, and Mark coming from the gold industry, the gold junior miner industry, exploring opportunities in tokenizing gold project. I really enjoyed this conversation. I hope you do too. And remember, if you're not subscribed to our YouTube channel, click the subscribe button now and follow us on social media to stay up to date with our news and interviews. Bob, Mark, it's great to have you on the show. How are you doing?
Very good. Thanks for having me.
Yeah, well, thank you.
Let's start with Bernstein's statement saying that the size of tokenization opportunity could be big as much as $5 trillion over the next 5 years, which is quite impressive, and will be led by stablecoin and CBDCs, private market funds, security and real estate. So when we talk about stablecoin and CBDCs leading tokenization, I wonder, do you agree with that, or do you have a different views on how the tokenization evolution will take place?
I think cash and currency is already being tokenized, right? And I know, right? USDC, stablecoins, USDT, these stablecoins are already facilitating cross-border payments, payments to vendors and service providers, and for different reasons. Some for just efficiency and the speed of settlement, others due to the fact that they might reside in countries where there are foreign exchange fluctuations and challenges. So it's already a thing. You know, just stable coins or tokenized money already exist. The CBDC push is simply tokenized money from the sovereign authority, right, as opposed to, say, USDC, which right now is provided by Circle, but the services of Circle. So I agree that tokenized money is certainly going to play a major part of the tokenization of all real world assets, and probably will occur in these next 5 years. I think we'll see more and more of these currencies like the euro, potentially an e-dollar. We already know there's the Chinese renminbi, the digital yuan, and we know there are pockets of, there are proof of concepts that are happening across many central banks. I'll just add here that INX itself has a CBDC development arm, and with our partners SIGPA, who are a firm that have provided real currency solutions for the past 100 years or so, we're actively developing CBDC solutions. So, and we wouldn't be doing that if we didn't think, that there's going to be a big demand or a big rollout, I suppose, of e-currencies over the coming years.
Mark, do you want maybe to add something on the tokenization opportunity? I mean, you are looking at that as perhaps something that could come and support the junior, the small cap space as an alternative investment. So do you think it's going to be big as 5 trillion over the next 5 years?
Well, 5 trillion is such an enormous number. It's trillions. So we're talking the stablecoin market at the moment in its absolute infancy. So yes, we have US dollars. The biggest stablecoin, as people know, is Tether, USDT, and that's 80 billion US dollars. They're only 80 billion US dollars, but that's a market leader by a very long way. And it's got, and on the Tether blockchain, they're also doing euros and yen, and now they've added gold. So Tether Gold is on there as well. So that is, and actually the Chinese renminbi is also on there, the Chinese yuan. So it's in its absolute infancy. the Bernstein report, which you mentioned, Steffi, they quote 2% of global money supply, so it's still a fraction, well, 2%, and that's $3 trillion. And that obviously will be led by the central banks' tokenizations, particularly China, which has already announced it's doing it. But that in a way is to control their own currency because it's an immutable ledger, and to control the people who use it. So there's a definite control issue, which was probably never by a centralized authority, which was probably never necessarily envisaged at the time when blockchain started. It was meant to be decentralized and friendly, but China will actually use it the opposite way to control use of its currency. So I think if you flip it the other way around, it's a major benefit to a centrally controlled state like China, stablecoins and blockchain in particular, if it's controlled by the state, which is what they're doing. So with that adjunct, that 3 billion could be a target. I haven't seen how they've really calculated it, but that's just central. That's just 2% of money supply, and then in addition, that's really central banks using money supply, of course. In addition to that, you've got trade. You've got what they actually don't mention is actually other debt being utilized within there for corporations and so forth. So I think that will all be added into the mix. But this is clearly, I think, going to be the most enormous market in the next 5, 10, 20 years. And
I agree.
It's just starting. It's really in its absolute infancy.
I agree. The report definitely focused very much on CBDCs and tokenized money. The use cases for tokenization, really fan out across multiple industry verticals. And I think in the private debt markets, like Mark might have been alluding to there, private debt, this is huge. So there are very many tokenization use cases. And there's other reports like Boston Consulting Group. They had a different report that looked at 2030 and had a 16 trillion number, which is even more humongous. But then that looked at all kinds of different tokenization use cases.
So, Bob, just following up on that, you mentioned about there are many use cases for tokenization. Can you maybe mention a few that you see are the one driving this change in finance and capital markets?
Mm-hmm. Certainly. I can certainly speak about what we're seeing at INX,
yes.
Whereby companies are, I'll talk about two: primary issuances and secondary listings of existing company equity. So with primary issuances, you're basically looking at private companies that are looking to raise capital for whatever their operations are, whatever their business model is. And they're able to do this by accessing retail investors in over 60 countries, which is where INX is available on a reverse solicitation basis. And these companies are particularly attracted to the ability to structure the security token in creative ways. So it's not a straightforward equity model whereby investors are automatically receiving equity in the company. It could be that. It could be some equity and some profit share. It could be no equity, all profit share or revenue share. And it could also be profit and revenue shares from very specific revenue streams in that company. So the creativity with which companies can structure the financial benefits to their investors is really exciting. And obviously a non-dilutive model where you're receiving investments without diluting your cap table can also be hugely attractive. So I speak about not the use cases in the industries in that example. I'm just referring to the sheer flexibility around of these security tokens, right? And in addition to being able to configure these financial benefits, there's also the utility benefit that could also be tapped into. So my token holder, my investors and token holders could get some kind of VIP access or discounts or benefits from a partner network and so on and so forth. So that's just the configurability of the tokens. Now the use cases as far as industry verticals is concerned, it's like, where do you want to start and where do you want to end? You could tokenize shipping, right? Entire ships could be tokenized. You could tokenize debt instruments for account receivables and invoice factoring. You could tokenize precious metals that are still in the ground. You can tokenize real estate, you can tokenize revenue streams, and you can tokenize cultural projects like sports clubs. Could look at basically raising money from their fans and distributing a very specific revenue stream, say for example ticket sales or merchandise. So in my position here at INX, we're literally speaking to companies across every industry vertical that you can imagine, and it's really exciting. Now obviously some might be more suited and some might be more ready to go, so to say, and others might need a little bit more of kind of constructive analysis of how tokenization might disrupt or enhance certain industry verticals. And we're actively working with a bunch of key partners across these various verticals to understand what that impact might be and how to capitalize on it.
Yeah, wow. Definitely an interesting area. Mark, as a CEO of Condor Gold, what are your points for tokenization for a gold miner?
Well, I think we could look at, and it's likely to be a major form of financing for the construction of new mines or the expansion of existing mines. Because at the end of the day, gold is a $13 trillion currency. The biggest buyers, as people know, in the last 12 months have been the central banks. The biggest holder of gold in the world, the biggest central bank holding, is 8,400 tons by the US Federal Reserve. So they're, in a sense, whereas they've tried in some ways, I think, to kill off to an extent or at least regulate the crypto industry, the gold side they can't really touch because it's a decentralized asset and a store of value for 5,000 years. But they're the biggest holder of all the central banks around the world. And China is 2,200 tons, just to give you an idea. So I think the gold part will get tokenized, and one of the big disadvantages of gold has been the actual use of it. You can have a bar of gold, but how do you pay for anything with it? And that's going to change in the next 5 years. And there are several staple coins with gold, Tether being the leader at the moment, but they've only got 250,000 ounces of gold. There's just under $500 million worth of Tether gold. That's tiny out of a $13 trillion industry. So I can see that moving massively in, and then you'll be able to pay with gold back Visa cards and so forth. So Tether Gold, let's say that's the stable coin that's the winner in the race. There are others. So I see that happening massively. And if you look at the tokenized part, I'm deviating slightly, but if you take the $80 billion of Tether USDT, US dollars, 95% of that is emerging market money. It's people who've put in their money in from countries that have been devaluing. If you take the Turkish lira, if you own that 5 years ago, you've lost 80% of your money as a local businessman. Well, why wouldn't you? You just want to hold US dollars or hold gold. And so hence they've used it to Tether Gold. Obviously, I appreciate it's used as for people buying cryptocurrencies outside the US dollar, if you like, and using USDT. But back to the gold mines, no one has yet issued a tokenized debt instrument to finance a new gold mine or existing gold mine. And I think that's going to change. And the World Gold Council, which is the industry trade body representing the top 35 gold producers in the world, is looking at which instrument they use and totally endorse, because it's good for them. Why is it good for the gold industry? Because it needs to be fully backed by physical gold, a tokenized gold. And therefore, as they mine it, there's a ready buyer. In addition to ETFs, which should be ETFs of gold, should be fully gold backed, and similarly with a stable coin should be fully gold backed with physical gold, deliverable and exchangeable and deliverable anywhere in Switzerland, which is what Tether Gold does. So I see it as a major change in mine financing forward and mine expansion.
Yeah, that's a very good point. Well, right. One of the challenges is about using public blockchain or private blockchain, and there is a debate around that because obviously public blockchain, they limit the control as well as centralized institution. So are you in favor of a tokenization using public blockchain or private blockchain, Bob?
I think it's early. It's very early days to want to be in favor of one over the other. I think we need to just see how some of these sovereign decision-making, processes are going to, play out. We know that there are lots of groups of large traditional financial players who are coming together and basically, building applications and solutions for their real world use cases on private blockchains. We recently saw the Canton network launching. We've seen Corda, which has existed for many years, and there are traditional financial transactions that they will just prefer to continue to run on these types of private networks. Having said that, blockchain as a whole and the democratization of finance really applies to the retail element. And this huge retail customer base or investor base that exists out there that potentially will pivot from this early couple of years of crypto's Wild West into a more blockchain-powered investment environment. I think that's where your public blockchains are going to continue to be very attractive. So I think potentially we're going to see both private and public blockchains continue to exist side by side for a lot of these use cases.
Bob, can I ask a question? In what you're seeing coming, are you seeing any listed companies, either US listed or outside of the US, who might have existing market capitalizations of hundreds of millions or billions, saying to you, we would like to access an additional form of financing for whatever?
Yes.
Are you seeing that sort of inquiries coming into you from that?
Yes,
and what
indeed.
sort are they typically?
Yes, indeed, absolutely. So I talked about the primary issuances, at the start of this call. We're also seeing companies that have already had capital formation, seed, Series A round, and have shareholders, and are now looking to access the ATS, the INX exchange for trading of digital securities by tokenizing those shareholdings and tokenizing that equity. And this is hugely exciting because traditionally, these investors are basically holding on to their share of that company for as long as it takes for that company to either go public or have another capital raising event, or unfortunately also potentially go bankrupt. And now through INX, there is a clear secondary venue for secondary liquidity and secondary trading. So
these are mainly private companies that are coming to you, as opposed to existing companies on the NASDAQ with $1 billion market
right.
cap
So that example is the private companies.
Yeah.
Now, you might have seen a press release that we put out about a month or 2 months ago, which concerns a company called Greenbrier Capital that is a publicly listed company on an exchange in Canada on the TSX, which is, I think, where you are.
Yeah.
And there we've created a mechanism through which an existing shareholder of that company can tokenize their shares and list those for trading on INX. And so therefore you'd have this company that is trading publicly on TSX and has some of its shares being traded in tokenized format on the INX ATS.
So technically, how does that happen? Does that mean that if a company is listed on the TSX and it's got a market cap of, I don't know, a few $100 million Canadian dollars, that you dematerialize the stock out of their settlement system and transfer that into a tokenized format on the blockchain?
You really just have to lock those stocks in some kind of escrow agreement.
Escrow account, okay.
And then you tokenize the equivalent of that in tokens, and then and INX, being a licensed transfer agent, gives us again that we're enabled then to maintain that that tokenized version of that cap table in relation
so it becomes
to
a shadow trading instrument. You take 10% of their stock, for example, out of circulation and escrow that,
pretty
and
much
then issue the equivalent of it in a tokenized format.
Exactly. So that's a secondary listing opportunity. Now the third one, this is something we put a PR out 2 weeks ago. This is a collaboration between INX and the DSDC, whereby as you might know, traditionally ADRs, depository receipts, represent shares of non-US companies that are trading on US exchanges. So for example, BP, Barclays Bank out of the UK could be traded on a traditional exchange in the USA in the form of a depository receipt. And what we're simply going to do is follow that same process, but then have those depository receipts trading in tokenized fashion on the INX ATS. So that's 3 separate mechanisms through which existing companies, whether private or public, are able to either fully tokenize their cap table or tokenize the shareholdings of one or more shareholders, right? Or use the depository receipt mechanism to have these companies, trading on the INX ATS.
Bob, can I ask a question about liquidity that you have on your INX platform?
Sure. Liquidity that's the magic, right? That's when we have really deep books and deep liquidity, then we're going to see the rush. We're going to see a lot more of these companies coming onto the tokenized, or joining the tokenization party, so to say. And this is what we're working on. This is building this entire space now. Every new company that comes to INX and lists or tokenizes, this brings in more eyes, more of a community. There is a very exciting secondary listing that we're going to be announcing at some point in the next month or two. This is huge. This is going to be instantly recognizable globally. These are the types of events that are going to really catapult us from wherever we are to the next step and so on. And remember, there's also these other exchanges and platforms out there similar to INX who are also constantly working on bringing in more participants into the space.
Okay, and when it comes down to onboarding people, obviously there is a lot to do with regulation. So how is INX approach, and also how do you onboard these, you kind of like onboard this liquidity, onboard these investors? So just walk us through the process.
Yes, it's a good question. So it really isn't very complex. First of all, any company can raise through the INX model. The companies don't have to be domiciled in the USA. They're simply raising money under the US SEC's framework through INX, which is a US licensed broker-dealer. And on our platform, there are 6 companies raising capital right now, and I think just one of them is actually US domiciled. And the regulatory mechanism through which this raise is happening, it is called a filing exemption. And so a Reg D or a Reg S filing exemption are simply mechanisms through which companies can simply notify the SEC that they are raising capital. And that's all it is. It's a notice. There is no complex paperwork and back and forth with the SEC like you would expect in an IPO. So INX as the broker-dealer simply represents or provides this guardrails through which a Reg D and a Reg S filing is done, and that allows the company to raise the capital. And what's the difference, or what's a Reg D, Reg S? A Reg D is a raise under which you access accredited investors inside the USA, and a Reg S raise is one where you access retail investors from around the world. And you can combine the Reg D and the Reg S to give you the best of both those worlds. So you'll be able to raise from accredited investors inside the USA as well as retail investors outside of the USA. And this is the path that all of those 6 companies have chosen so far that are raising on INX. Having said that, there is a Reg A that can be followed as well. And so that's the regulatory pathway through which companies would be raising capital through INX. The technical side of things, we take care of all of that. So creating a smart contract, minting, distributing those tokens into all of those investors' wallets, that's something that we provide as part of our end-to-end service. And generally some kind of advisory hand-holding service that we wrap around the client and make sure that they're not sort of have to figure it out for themselves, right? How am I going to go through this entire process? So INX is basically an end-to-end service provider when it comes to, educating potential issuers to guiding them in the right direction in terms of what third parties they might need, like an STO, security token lawyer, marketing agencies, for example. Stefania, we've discussed this as well in the past, and being able to basically provide the types of services and third parties around them to basically succeed.
Thank you, Bob. Mark, the last question is, from your perspective, do you see that there are quite a few junior companies in the UK? They are looking for alternative way to raise capital, to onboard a new investor. So do you see this kind of demand to alternative forms such as tokenization to kind of bring capital to businesses?
Well, I can only really talk from the perspective of the sort of gold industry, if you like. And I think that's definitely, there's a lot of interest. The trade body, the Global Gold Council, as I mentioned, has got papers happening. I think they'll be announcing further details this year on that. In terms of tokenization of other assets, of whether it's hotel assets or any other revenue streams and stuff, I think that's one for a UK stockbroker regulator like Bob to comment on what the demand and appetite is. But from an industry perspective, I see the raising of debt for gold in particular, because the gold mine can always produce the gold and repay in gold, in physical gold later for the token. So you could perfectly borrow today $100 million in a tokenized gold, say Tether Gold, and you could repay that once you're in production. You repay that in Tether Gold. You just produce the physical gold at the refinery in, say, Switzerland or the States, and switch it into Tether Gold and repay it. So I think that's such a neat solution. It's effectively what happened 300 years ago when the British were financing mines in South Africa. It was the old gold loan, where you lent money down there, you didn't get any interest during the construction period. When it went into production, you got your money back over a period of time at a certain return. And that's all that needs to happen within a tokenized debt instrument for gold, and you can put a coupon of 10 or 12% on it. So I see that as super attractive. And I don't see why, and the existing banks and funds are just too slow to move. Yeah, they're asleep at the helm of the ship, I think. I mean, I think the regulators are too, to some aspect of this. But I can see that if you tokenize these debt instruments, and actually, one thing gold doesn't have a yield, which is always criticized for. You can buy US 2-year treasuries today on 5%. Well, if I said to you, you can buy gold and I'll pay you 10%, okay, and we can secure that fully collateralized on $5 billion worth of gold in the ground, and I'm only going to borrow $100 million. That's a pretty good collateralized instrument on $5 billion of gold. Admittedly, it's in the ground, but I'm only tokenizing 2%. I'm only borrowing 2% of my overall value in the ground to build a mine and so forth. So I see that as being very attractive for our particular industry. And I'm sorry, Steffi, if it's a bit focused on gold, but I think that it's quite unique. You know, if this was lithium, it would be different. But I think that could also happen, incidentally, and copper.
I think that's a very interesting. That would work extremely well to be able to just use a gold pegged stable coin, right, like a Tether Gold, or like you said. I mean, so far we at INX, we have paid out a dividend to the investors in one of the raises, and this was done in March, and we did that by using USDC, and that was super easy for that issuer to simply say, hey, here's a dividend that we would like to distribute to those who have invested in us as of the end of last year. And it was literally a 1-day effort to just pull up all these wallet addresses match the KYC up, and then distribute that amount across a couple of hundred wallets. So the mechanisms are there. Just going back to the liquidity point you made earlier on, and what we refer to as distribution within the industry, which is obviously finding these investors and being able to almost pre-sell or not underwrite, but basically create a lot of noise within a large investor community, so that these raises on the primary issuance side can really succeed. Last week we announced a strategic partnership with Republic.
Yes. That was quite impressive. They invest, I think, just over 5 million.
5 million in INX, and we are embarking on a strategic collaborative agreement, which sees us really proactively work to tap into their very large, 3 million strong investor base, with our digital tokenized offerings, and being able to suddenly say, look how we're amplifying the reach, the investor reach, and you're not just talking, retail investors around the world. There's a large percentage of those are accredited. And so yes, the distribution is critical. The demand and the supply have to go together, right? So the supply of quality deal flow, that's important. Being able to list more and more companies especially when there are tangible, assets behind the token. So in the case of gold in the ground, it couldn't be more tangible. It couldn't be more physically backed by a real world asset. So getting that quality deal flow in, that's what we're working on. That's what we've been working on very much so in the last year and or two, but the distribution mechanisms as well, how to basically get eyes on all of these exciting offerings and investors who are comfortable with the custody model, because there is a tokens being held in a wallet that needs to be understood as well.
Yeah, I think, well, ultimately we are going to get there. It's kind of like a new system, but it also offers some really creative opportunity as well for the capital market space. So definitely a space to watch. Bob and Mark, thank you so much for coming on the show. And for anybody that want to connect with you, Bob, where should I go?
I am on LinkedIn, Bob Ejodame, and generally we're available on most of the social channels. INX can be joined on Telegram, follow us on Twitter, and so I look forward to hearing from many of the audience and potentially guiding someone out there on their tokenization journey. Thanks very much for having me.
Mark, for you, where they can find you, where should they go?
I'm also on LinkedIn, but you can go via the Condor Gold website, and there's an information at Condor Gold, which will come through to me eventually.
Okay, thank you very much both, and it was great to have you on.
Thank you.
Thank you.
Thank you.
Cheers.
Thank you.
Bye-bye.